Welcome everyone to this video. So I'm gonna run down previous moves on Bitcoin so I can explain to you how you can combine open interest and delta. Keep it nice, short and sweet. I'll try to keep the video under 10 minutes. We'll see how that goes. Now, ladies and gentlemen, first I want to thank you for your attention, for coming and watching this video today. Now, an example number one. So you see over here in this section of the chart, essentially price is forming a slow grind move, and essentially you see like huge open interest increase on the way down, also a lot of negative delta coming in. Essentially just looking at the market structure, when price is slowly grinding down, this is a bearish formation. So essentially when you add on the open interest increase and the negative delta coming in, this means that sellers are definitely in control. And then what happens? On 6th of September, you essentially continue creating these open interest spikes. These are not just spikes, they're increases. It's not just like over moment, like bam. Over moment spike is this one over here. Okay, so essentially this is, even before this happened, you were forming like a slow grind but to the upside. So the same thing, slowly grinding it to the downside or to the upside. It's a major shift which you can acknowledge, and I'm gonna explain to you and I'm gonna give you a few examples. So over here in this meantime, price is slowly grinding, slowly to the upside. Of course, this is the 30-minute time frame. If you move into the lower time frames, you're gonna see the same rotations. Now, usually these occur in terms of, it could be a demand chain, or it can be perhaps on OT tests, you know, OT tests, etc. But a slow grind is the thing where you're creating these high lows and they're not being tapped on the way up. In my opinion, this is much more healthy for an uptrend than if you make a high, make a low, make a high, make a, you know, you sweep that low and then you create a new high. In my opinion, this is not the most healthy one, because what's gonna happen is you don't have actually formed absorption at the lows. A formed absorption at lows or highs, you see over here, you owe these highs, you never take them out. You know, this is a controlled selling. So this is an example number one, a slow grind to the downside, essentially with increases in the open interest. Sellers are in absolute control with negative delta coming in and price slowly grinding down. So I would never understand why would someone try to long in a scenario like this. What was I was over here. And now let me just go back and give another example. So over here you can see price is slowly grinding to the downside, no highs are being swept, all these highs, they're being protected, and in the meantime what is open interest doing? It's increasing on the way down, but price is slowly grinding down. Now over here, what's price started doing? It started slowly grinding up. Change in the behavior of price. And then over here, I just want to look into the open interest and the delta, because this is the focus of today's video. So an example, let's say, yeah, let's talk over here. Let's talk, I was explaining first about this section, now we're over here. Now an example is over here. You see this huge open interest increase, then you kind of make it flat pretty much to where the original move is. You see the negative delta coming in. So in the meantime, if you combine this with the cumulative volume delta, and if you see that you have a CVD absorption between these two lows, let me just add it right now so we can take a look at it. I don't know if this is the correct one. It's not the clean one. I want to look at, let's check, volume suite. Maybe Leviathan got it right. Let's take a look. Cumulative volume delta. I want to change the measure. I want to move into measuring instead of coins. I want to measure the dollars. If we make it as a line, it would be different. I think we can zoom in now. Okay, so on this pair, on USDT, you don't have a divergence, but let's look into the USD pair. This is why I like to look at CVD on the USD pair on Bybit instead of perpetual one. So let me just check, where was I? The open interest increase and then make it flat. Where was that? Man, let me just find it so I can. Okay, just give me a second, guys. I'll find it. Okay, I'm totally lost with it. I don't want to lose your time anymore. Forget about it. I'm not gonna look at this. Coming into today's topic of discussion, combining open interest and delta. So over here, you can clearly see the delta being positive and open interest increasing, and this is a whole area. And then you see the decrease in open interest. Okay, so essentially, just people were closing over here in that section. Doesn't mean that you have like new positions opening. Essentially, open interest and delta, they're gonna show you the areas where you have aggression coming in. So keeping it in the most simple terms, aggressive buys coming in, aggressive buys. So as long as this area is being protected, you can expect higher movement. And same thing over here, open interest increase, delta is positive. Essentially this is an area of aggression. Once this, not once, but until this area is being protected and price is not moving below that, you can use it as an invalidation point for your long positions. And same thing over here. So this is the difference, right? So over here you can see between this high and this high, you clearly see that open interest makes a new high. So these two highs, they're healthy. Now coming into the move up, you can clearly see that open interest made a lower low. Okay, and delta, you don't have like such spikes as the previous ones. So what I mean by this, you can clearly see on this chart how aggressive and bullish formations are formed, you know. Example number 1, example number 2. We can use this as an example as well, because this is a positive delta spike and an open interest spike. Now coming into this section of the chart, yes, you do have a slight increase in the open interest, but as I said, between this high and these highs, you have divergence on the open interest. So essentially this move up is being formed. Why? Because people closed, not because there is aggression. So essentially you're trying to break out. First, it's Friday. Okay, so on a Friday you're trying to break out of this range, which you have been Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Thursday, a whole week of a range. You're trying to break out on a Friday. And pretty much you end up, when did the CME close? The CME closed over here. And this whole section, you can see over here there is no delta follow-up, there's no open interest increase. So essentially this move up is being formed primarily of people closing the positions. And once you get accepted back in the range, so an acceptance can be pretty much defined or by just using market structure, or by using, let's say, the fixed range. You can use anything. So an example over here, you can clearly see price slowly grinding down. You have open interest increase on the way down and negative delta. Sellers are in absolute control even before the slow grind formation. So essentially just on the Monday open, during Asia and pretty much London, you have a bearish bias established because of the open interest and the delta and the acceptance into the prior range. And if you look on the left, pretty much if you lose this range just by market structure, away is your next point of interest. Pretty much this point, this is your next point of interest. And what does price do? It comes into that point of interest. And what is happening in the meantime is pretty much, I would say, interesting, because you have decrease in the open interest in that area, you have negative delta coming in, so pretty much there's no no aggression coming in. It's pretty much people are most likely accumulating because someone is absorbing all this negative delta with limit longs. And just for the sake of giving you the right example, I want to look at the CVD and just to check if there is a CVD divergence, and sorry, I'm doing the same mistake again. I want to show you guys something which you can implement into your trading. So coming into the USD pair again, not the USDT one, and looking into the most recent formation. Let me just clean that up a bit. So pretty much we should have a divergence between these lows, this one and this one. So what is price doing? Price made a lower low. Price is making these lower lows on the CVD. Okay, so someone is absorbing them, and this is the proof. Like, the data is the proof in itself, and you should always look at the delta and the open interest and the data, of course, the whole data. So coming into my point, when you have this negative delta and price is not moving, and there is pretty much the open interest is flat pretty much throughout the whole time, there is no aggression showing up, you can expect that someone is absorbing them. And if you're thinking that someone is absorbing them, then okay, move into the CVD and just check if there is a clear divergence. Now over here is where things get a bit messy. Now this is something which you have to be aware of. Now during this whole time you can clearly see positive delta but no spikes, positive delta and increase in the open interest, yes, yet price is moving down. Now this is implementing the secret and the truth that you have to be away from the market. Don't trade it until there is a clear difference showing up. Now what I mean by this, very clearly you need to get some spikes in the delta. Okay, so spikes over here, these are spikes. This here just like meh, but the open interest increase is giving you a clue that there is something happening. Longs are coming in, but they're not being able to establish a base for price, because you can clearly see that price is doing the slow grind. Okay, that's why in my Discord I was short over here, I wasn't long. Many people on Twitter were posting longs, but I was shorting here, and I closed it once we swept the 59 horizontal level. Okay, so pretty much the bottom. You can clearly see the negative delta spike. Then what happened? Now this is the interesting part. Over here you see clear spike in the open interest, the positive delta coming in. Now this is the aggression which I was talking about. You want to see these moves as a change of behavior. Now of course this is happening again on Friday, but this is happening when? Throughout the whole day. It's not just for one session, it's not during London, Asia or New York, it's happening throughout the whole session. Now next thing, you can clearly see you form a range, and in the meantime there is no spikes, open interest is flat, nothing is happening. However, as I explained before, you can use previous zones of increase in the delta and the open interest as a protection points. Now this is a protection point. As long as you're above it, you can expect higher prices to come. Then what happens? Over here on Monday during Asia session, clear spike in the delta and in the open interest, suggesting that you're breaking out of this range. And as long as you're protecting this area, you should expect higher prices. Next thing, what happens? You have another protection point. Over here, positive delta spike, open interest increase. As long as you're above this pink point, you should expect higher prices. Yes, it got tested. Why it got tested? Because we had single print over here and also the OTE. Clear. Now, again, right now you're seeing lots of positive delta, and most likely you're gonna get an open interest increase, but we have to see, because this is gonna be another protection point. Now I hope this video gives you a bit of a clarity from all the nonsense online. And if you liked the video and the education that I've shared with you today, just give me a like, and I would expect to see you in the Discord. Thank you for watching this.